What up, everybody? It's your boy Money Making Jess. We back at it again with another daily debriefing. So today is Monday, November 1st, 2020. Man, we down to the last 2 months of the year. Wow, 2020 has gone down in history for real. But anyways, people, we all know what tomorrow is. It's vote day, November 3rd, 2020. Please get out and vote. If you vote for Trump, don't go. But if you vote for Biden and Harris, please go out and vote. But I ain't a hater. If you vote for Trump, I don't care because we're gonna beat y'all fair and square. So everybody get out and vote, regardless of who you vote for. Let's make this a history-making voting year. Once again, tomorrow is voting day. Please go out and vote. Okay, so today's topic is going to be Forex lot size matters. So basically, what's the best Forex lot size for new Forex traders like myself and other followers of this channel? And also, this in general, what's a good lot size to start with or trade in? And my conclusion is that it's really based on how big your account is, right? If you have a small account, there is no reason for you to trade in the standard lot size, which is 100,000, because even though for each pip goes up is $10, so that means each pip that goes down is $10. So you can blow your account really fast, and your account won't last that long. And plus, starting off is not really the object of the goal is to make all this great money. Starting off is you want to get your risk and money management down pat, your trading psychology down pat, and your trading plan. So those are the order you should get down pat, and not really worry about how much money you're making. As long as you're making positive pips and they're more than you're losing your negative pips, you're doing well, okay? And your drawdown is low, it's not super high, and you're making some profit. Don't concern yourself, people, with I gotta make $500 there. I gotta make so much a week. Especially while demoing. Demo trading is where you homing your skill. Okay, this is an art. So this is where you become Picasso. This is where you become the next whoever you want to be. But you got to do it in a certain cohesive manner. Okay, and so last week and also starting this week, I told my main focus this week is working on money management, my chart size frames, and my overall trading psychology. Those are the three things I'm focused on this week. I may or may not make a trade. I'm not going to do a trade today. Hopefully by Wednesday or Thursday, I will make a trade. I just got to fine tune this because I've noticed people. If we look over here, let me go down here to my trading history. Okay, so when I win a trade, my pips are nowhere near the amount of pips when I lose. So it's like, yeah, I'm winning a lot of trades, but they don't equal to the amount of pips I'm losing. So yeah, I'm gaining money, but as soon as I hit a loss, I'm basically giving out all back, and that's not what you want to do, you know. So and I think a lot of times I get out too early. That's part of the fear. That's the trading psychology because I just want to get a positive pips versus letting the trade um, manifest itself. And my problem is it's the trading style, right? So I'm using scalping, intraday, and swing. So I've come to the conclusion, people, I'm not gonna scalp because when you scalp, you don't get the true potential of the trade. You know, especially if it's in a true uptrend or downtrend. Sideways, I may scalp or whatever, just get in and get out. But my main focus really is to find the true uptrend and downtrend, and not really to trade so much in the zigzag. You know what I'm saying? The wavy, the confusion. You know what I'm saying? That's when it's going up and down, up and down, up and down. Basically, where it's stuck in between support and resistance. You know what I'm saying? It's just too choppy. I'm not on my charts like that, and I don't want to be on my charts like that. I know I said in the past I like watching it, but now it's not that exciting anymore because I'm not making my true profitability off each trade because it's too hectic. Because we also have to figure people's spread, right? So when you enter a trade, you are paying for that, whatever the spread is. And also when you close that trade as well, you have to pay the spread price. So you're paying to get in and out. So you have to take that in a factor. So if your spread is kind of high, you see what I'm getting at, people. So you have to calculate spread into the equation as well. And I'm coming to the conclusion by just looking at my charts. And this is part of one of our trading plan is to study the charts of old close trades. I've noticed when I let my trades manifest and get stomped out by the take profit, I gain more pips. But if I'm sitting there watching it and getting fear is taken apart because that's the human emotion, I'm taking out too early. So my winning, a lot of my majority of my winning positions don't mature. So they're very low win pips. They're wins, but they're low pip wins. You know what I'm saying? But when I lose due to stop loss, it's taking way too much. You know what I'm saying? Versus me winning. So I've changed that strategy. Um, I'm not probably gonna trade too much in zigzag anymore, even though I know that 60 to 8% of all symbols stay in a zigzag pattern. You make your money in the breakouts. You know what I'm saying? Either when it breaks resistance or when it breaks support. But it has to be a true breakout. You know what I'm saying? And that's where you make your money at. The zigzag, I still may do zigzags or whatever, but I'll only do the zigzag when it's starting. You know what I'm saying? Red to begin the zigzag, not like 8 or 7 bars down is almost at support resistance, about to bounce back up or bounce back down. I got to get in when it's starting. So that's going to be another criteria I'm going to add to my trading plan is that the entry point I need to work on has to be more zoomed in, you know what I'm saying? More precise, basically, more laser focused, and then just seeing it going up or whatever, and it's already 4 or 5 bars in, then I get in. So I'm limited. There's another thing too why I'm not capitalizing on the potential profits, the pips. So that's what it boils down to, people, is capitalizing on the maximum pips you can get. We got to remember that a lot of this stuff is lagging. You know what I'm saying? That's why it's good to look at the live price action, because price action will give you probably within milliseconds of the true price. Nothing is really live. You know what I'm saying? 'Cause everything has a delay. But if you rely on your indicators, because a lot of them are lagging, they're not going to be precise. So it's always a guide, it's always a reference. So you kind of want to, you almost got to be like a person who can see into the future. You know what I'm saying? Or they're just like, if you just kind of know where the trade is going. So that's what I'm focusing on today. I have started to read the featured book, which is listed in the show notes, and it's Forex Money Management for All Currency Trading Strategies. I did eventually get it. I eventually did buy it off of Amazon Kindle store. The problem was it had an old credit card and I had to update that and all that crap. So in my next video, I'll show you guys. I do have that in my library on my Kindle, my cloud Kindle reader, and all my other devices. So far, it's interesting. I mean, I'm liking it. And don't forget, we still have the $100 trivia challenge going on. I just didn't have enough folks participate. So I extended it to December 1st, 2020. And I also changed a little bit of how to enter. Maybe that was confusing because I know a lot of people don't have Telegram. So what I changed it to, so now you still got to answer 3 out of 5 to qualify. And also, too, to submit your answers to answers at mmjdoesforex.com and subscribe to the YouTube, the Twitter, Instagram accounts. That's all you got to do, people. And on 12/1, if I get enough people to participate, I'll send them $100 and it's strictly just going to be $100. I'm not doing the Bitcoin anymore. And you also receive a lifetime membership to Greenway District's Traders Club, so you will be member number 2. All right. Everything, all the questions can be answered either reading the show notes, watching the videos, and listening to the podcast. All the answers are there. It's not complicated. The more you answer, the better you are. All right. And I explained a little bit more in episode 5. So if you want to get the full gist of of the program or the contest or the giveaway or the challenge, view or listen to that episode. All right, I think that's it, people. I think that's it. That's it. That's it for today. I appreciate your time. I'm also still in school at Pipsology. I'm still in the fundamental analysis module, and later on today I will be driving for Lyft later. And I'm just still trying to home in and fine tune this money management and the lot size. I think I'm gonna do either mini or micros. Because you, you got to base on how much your account is. You know what I'm saying? So beginners, small accounts, stick to the minis and the micros. Then once you build up your account to where you have 10% of the 100,000, which would be 10,000, and then I would say, yeah, then move up. But me personally, I want 100,000 in my account before I start that, because it's all about your risk to ratio. You know what I'm saying? Because the less money you have in that account trying to do those big ones, you'll blow your account quickly. So you want to have some room to maneuver. So I would say at least 50,000 in a live trading account to do the big boy, the standard. That's eventually where you want to get. It's the standard trading. But starting off, people either start with the nano, which is penny, um, the micro, which is 10 cents, which is 1,000. The nano is 100. The micro is 1,000, and the mini is 10,000, and standard is 100,000. And so yeah, so definitely read up on that because that's crucial. So starting off forex trading, you just want to hone down your trading, your psychology, and your money management, and just trade low volume right now. As long as you're making pips, that's good. You're making more pips than you're losing pips, that's fine. That's what we want to get at. We want to have this down packed before we do live trading, which that usually takes 6 months to a year, anyways. Starting off, this game is very, very slow. So you have to remember that this game is very, very slow, people. Learning it and mastering it. Now, you can always go to the signal providers or copy and paste providers and do it that way. But here at Money Making Just As Forex, we teach you how to fish so you can eat for life. Okay, people? I'm out of here. I appreciate your time. And like I always say, smile, be profitable, be smart, and just have a little bit of patience. And the universe, she is going to bless you with all the wealth that you deserve. And until next time, this is Money. Yeah.